the acquisition as well as the way forward. Remember, Crompton has announced the merger with Butterfly Gandhimathi, and let's try and understand what the merged entity would bring about. Shantanu, if we look at the valuation at the time of acquiring Butterfly last year and the valuation being offered in the merger today, it's almost a 10% drop. I understand that market dynamics have also changed. While the CG consumer share has dipped more sharply this time around, that seems to be, a bit of a problem. Can you justify for us what the merger ratio is and how have you valued these two entities to arrive at this equation?
The valuation has actually been done by independent registered valuers. It was E&Y who did the valuation on behalf of Crompton, and PwC who did the valuation on behalf of Butterfly. And they submitted a joint valuation report to the boards of the two respective companies. They obviously used their own standard or methods to arrive at a valuation. Once they had a valuation, then this was actually a fairness opinion was provided on the valuation and the swap ratio by Kotak Mahindra Capital on behalf of Crompton and SBI Capital Markets on behalf of Butterfly. And this fairness opinion was provided by these two on the valuation which was delivered by EY and PwC. And this went to the boards of the two companies independently, and then the boards approved based on the valuations provided and the fairness opinions provided.
Are some of the smaller, Mr. Khosla, are some of the smaller shareholders also on board with this, or do you foresee any opposition to this swap ratio at all?
No, we believe actually that this merger is beneficial really to all stakeholders, shareholders of both companies, and also other stakeholders, employees, customers, suppliers. And obviously, we believe that it's absolutely an appropriate and a fair swap ratio and evaluation. And we are very optimistic that this will be supported by the minority shareholders.
Okay, all right. We got that then, Mr. Khosla. Let's focus on the operational performance. Now, one of the reasons you're doing this is for cost synergies, right? How much have you realized till now? And what's the extent of cost savings you expect in the future?
We expect, as we had always expected, synergies in two areas. First, obviously, cost synergies, and the second is revenue synergies. So let me address them one by one. Cost synergies, we have actually been getting over the past 1 year as we've put in place various programs such as, for example, common purchase of commodities. So the scale enables us to get better pricing and things like that. Obviously, one of our reasons for recommending this merger is that we believe that once the two entities are merged, we will actually be able to accelerate our program of cost synergies as we move forward. It will move into areas such as, for example, supply chain, logistics, warehousing. Because the businesses are so similar, you won't necessarily need duplication of various elements in the supply chain. Secondly, moving on to what we think is strategically even more important, the revenue synergies. We expect the revenue synergies to start kicking in this coming fiscal and also accelerate as the two entities get merged.
So will the current manufacturing facilities be able to meet the combined needs? Just trying to understand, will there be any brownfield or greenfield expansion that you're looking at?
There are already certain opportunities which we are already beginning to work against. For example, Butterfly today has got unutilized capacity in mixies, while Crompton is manufacturing its mixies from a number of outsourced vendors. So bringing Crompton mixies in-house into the Butterfly manufacturing facility is a project which clearly immediately adds value. Beyond that, we are working on increasing and improving the capacity and reliability and quality of all our manufacturing facilities, both Butterfly and Crompton, by investing in automation, investing in improved processes, investing in more digitization in the manufacturing process. We are also moving, as we do this, to bring more production in-house. Finally, as we need capacity, we will continue to add over time greenfield as we see fit.
Okay. Mr. Khosla, can you quantify how many distributor networks have been added with this merger?
It starts off with a combination of existing Butterfly and existing Crompton appliance distributors. So if in a particular city, I have got 4 distributors of Butterfly and I've got 3 distributors of Crompton appliances, not necessarily fans, I would automatically then have 8 distributors for the combined business. On top of this, I will have to add and strengthen more distributors if I want to grow to a leadership position. This is a step-by-step process, which we're beginning in the West and the North, starting April, May, June. As we learn from this, and as this merger, when it gets approved and formalized, it will help us accelerate this process of expansion.
All right, we're almost done with FY23, sir. What kind of a revenue growth are you working with for FY24?
The best way and, the fairest way I would define our objectives would be to grow a couple of points faster than the market in all the segments we operate. Some a little more so, like appliances. And the reason I put it reference to market is because there's still certain uncertainties about market growth rates, etc., looking forward on the next 12 months. But if I look on a more long-term sustained basis, I think we are talking about growth rate in the low teens as a bare minimum.
Okay, what kind of margins are you expecting? I mean, what could the margin profile be, just to understand, post the merger?
See, the EBITDA margin right now for Crompton is in the range of 13 to 15. And in Butterfly, we have already improved it from a historical 6, 7 to about a 9 or 10. We will continue to gradually grow the Butterfly margin. However, again, I don't want to commit to a number because our focus is really going to be more in the initial years to take the synergy benefits and reinvest it in growth.
All right, Mr. Khosla, thanks so much for stopping by and giving us all of those details. Wishing you all the best for FY24. Well,